Good afternoon, everyone. Once again, thanks a lot for joining in the watchlist. Dow is currently down by 1,094 points, 3.35% down. S&P 500 down by 158 points, 3.8% down. NASDAQ down by 553 points, 4.6% down. Good afternoon once again, and thanks a lot for joining in the YouTube live program, The Watchlist by Magenta Trade. Today is 18th of May and Wednesday. It has been, I would say, very, very raid, almost a bloody raid. At Magenta Trade, we teach you how to grow your portfolio using option trading strategies. We explain in simple terms how you can participate in the world-leading companies with a fraction of the amount that you'd need as normal investment. In the vast ocean of stock market, there are plenty of opportunities to gain from the movement of share prices every day. However, market is unpredictable, volatile, and sometimes complex to understand. In order to be successful, you need a disciplined, rule-based approach developed over a long period of experience, backtesting, and research, and focused on building a long-term portfolio to protect your hard-earned money. But first, let's have a look at our disclosures, and let me first share my screen. Okay. So today is, May 18th. All our discussions at Magenta Trade are solely for educational and information purposes. We are not investment advisors, and you should consult a financial advisor before making any investments. Option trading involves exceptional gains, but at the same time, they pose inherent risk. Past results are no guarantee of future gains. We are not finance professionals, and we are not aware of your personal financial circumstances. For more disclosures, you can visit our website, www.magentatrade.com. A few words about me. I have been trading for last 15 years. I have turned my personal trading experience and passion into professional coaching, and recently we have formed the company Magenta Trade to share with you my strategies of success in trading using simple terms and techniques. My favorite areas of coaching are trade management and money management. I have experienced immense potential using option trading strategies, and I would like to share that with you. I would like trading share options based on stocks and ETFs, and I help you understand how they might help you build a steady and reliable retirement income stream. As a coach, I focus on a daily routine, follow simple rule-based strategy, use simple tools to enter and exit the trades, and manage your positions 15-20 minutes every day. Okay, let's have a quick look at some of the earnings reports that have come up today, and we'll start with Triumph. Triumph Group Incorporated reported fourth quarter earnings of 2022, 39 cents per share on revenue of $386 million. My apologies there. Right. Just the screen I was looking for. Sometimes. However, the estimate was around, expectation was about 41 cents per share as earnings, and revenue of $405 million. Revenue fell 17.2% compared to the same quarter a year ago. The company said it expects fiscal 2023 earnings of 40 cents to 60 cents per share on revenue of 1.2 billion to 1.3 billion, whereas the expectation was around 1.5 billion during 2023 financial year. Okay, Triumph Group designs, engineers, manufactures, repairs, and overalls a broad portfolio of aerostructures, aircraft components, accessories, subassemblies, and systems. Okay, let's look at some of the other details. Operating income of $38.8 million with operating margin of 10%, adjusted operating income of $43 million with adjusted operating margin of 11%. Net loss of $10.6 million or 16 cents per share. Adjusted net income of 25.6 million or 39 cents per diluted share. Cash flow provided by operations of $33 million. Free cash flow of $29.1 million. Recently, Triumph Group appointed Neil J. Keating as new independent director on the board as well. Okay, let's move on to the next one now. Lois. Lois, before I progress, so TGI shares are currently down by almost 22%. Yeah, the stocks are down by almost 22%. Lois reported first quarter April 2022 earnings of $3.51 per share on revenue of $23.7 billion. The estimate was about $3.24 per share on revenue of $23.8 billion. The company said it continues to expect a fiscal 2023 earnings of $13.1 to $13.6 on a revenue of $97 to $99 billion. So the stock is again down by 5.6%. And let's look at some of the other aspects of the report. Okay, sorry, in terms of other aspects, sorry. Gross margin is 34% of sales as against 33.29% of sales a year ago. And net earnings 9.86% as against 9.5% a year ago. But the overall amount just marginally increased from $2.3 billion to $2.33 billion in terms of net earnings. Cash dividends also increased from 60 cents to 80 cents for this quarter as against 2021. And comparable sales for US home improvement business decreased by 3.8%. So that is the major driver for the share price today. The shares are trading at a loss of 5.6% currently. And operating income as percentage of sales also decreased to 12.8%. Sorry, increased from 12%, 12.8%, 13%. Total share repurchase of approximately $12 billion, capital expenditure of approximately $2 billion. So that's Lois. The other one I like is TJX. TJX shares are actually up today by 8.7%. They reported first quarter earnings of 68 cents per share on revenue of $11.4 billion, whereas the expectation was 60 cents per share on revenue of $11.6 billion. The company said that they expect second quarter earnings of 65 cents to 69 cents per share and fiscal 2023 earnings of 3.13 to 3.20 per share, whereas the expectation was about 76 cents per share for the quarter. So the market has cheerfully accepted the results, and the shares are higher by about 8%. Financial year 2023 quarter one adjusted pre-tax margin of 9.4%, and FY23 GAAP pre-tax margin outlook of 9.2% to 9.4%. Okay. So other highlights: gross profit margin for the first quarter of fiscal 2023 was 27.9%, a 0.2 percentage point decrease versus first quarter of fiscal 2022. During the first quarter, the company returned a total of $907 million to shareholders. Okay, the other company, not in this presentation, but I would like to highlight is Target. Target shares are down by 28% today. They reported first quarter April 2022 earnings of $2.19 per share on a revenue of $25.2 billion. And consensus earning estimate was $3 per share with a revenue of $24.4 billion. Company said it continues to expect fiscal year revenue of $107 billion to $112.4 billion, whereas the expectation was $109.9 billion. The major driver for the shares going down is the cost. There is a significantly high cost incurred, and management has accepted that the higher cost due to write down of inventories, then the supply chain related issues, and then in terms of the logistical cost increase, wage increase, and there are a number of other factors for the increase in cost. And as per the company, this increase in cost is going to remain for the rest of the year. So that has driven the downslide. Currently, the share price is down by more than 28%. Okay, so at Magenta Trade, we base our strategies on 3 dimensions of investment: long-term capital growth, building a retirement portfolio over a longer period of time, generating regular income using stocks and options trading strategies, ensuring your capital is adequately protected against severe market downturns so that your hard-earned money is not wasted in adventure. Now, let's have a look at some of the profit numbers. These are some of the numbers that have been I have noted from last 2-3 weeks of my trading. SPX gain of 15.5% in 5 days, a workday gain of 8% in 10 days, SPX gain of 14.65% in 3 days, Apple gain of 13.25% in 6 days, Microsoft gain of 10.84% in 6 days, Apple gain of 15.32% in 3 days, McDonald's gain of 7.9% in 15 days. Yesterday, I closed another SPX trade of 15.38% in 5 days. But today, again, I noted Qualcomm, a gain of 12.5%. I just noted before this show, and that took me 10 days. Accenture, 10.67% in 10 days. AMD, 13.5% in just 8 days. So these are some of the latest profit numbers, trade profit numbers. I'll update them in the slide later on. Okay, in terms of secrets of strategy or trading, you should be confident of why you are investing, using specific criteria of entry and exit, following effective proven strategies to grow your portfolio, and safeguarding your capital from the massive volatility in the market. You should also look for opportunities in the market, whether the stocks are going up, down, or sideways. Our strategies should consider all scenarios that market presents to us to explore new trade opportunities every day. At Magenta Trade, we teach you how to follow the simple steps to explore and invest in stocks and options, following clearly defined rules to trade management, entry, and exit. Practice the simple steps, use the available tools and resources, follow the rules so that the process becomes mechanical and efficient. Investment is a process of consistently applying the techniques that we teach on a regular basis and aim for success with perseverance and analysis. Even when the odds are against us, you need to follow the rules to protect yourself and maintain discipline to attain long-term results. Finally, investing is a process of continuous learning. There's no better investment than educating yourself with better strategies and techniques. At Magenta Trade, our complete focus is in educating the investors and traders so that they can find new opportunities by themselves and do their best with the investments. Okay, in our options trading masterclass program, we teach you the fundamentals of option trading, factors determining pricing of options, how the options help you make significant gains using small investments, and how you can protect your traditional investment stocks and make regular income in your portfolio. We follow a step-by-step approach for entry and exit in different market conditions to explore trading opportunities. Our rule-based strategies help you to find profitable trades using simple tools and techniques. We teach you how to manage your trades on a daily basis based on developing market conditions in order to handhold you in this learning curve. During the program, we help you with live trading sessions where we make real life trading and show you the positions that we are trading. For more information on our courses and learning material, please visit our website www.magentatrade.com. In this watchlist program, we navigate through the market and discuss about earnings, which we did, major announcements, market developments, and we browse through some of the stocks that we keep on adding in our watch list. Now, let's see what's happening around the market today, what's driving today's market. I'll switch off my video so that we can focus more on the screen that I'm going to share with you, which is a trading view. Okay, in terms of trading view, the stocks, S&P 500, yesterday I mentioned about this bearish channel, and I noted that the index has almost reached that channel here. So that's very interesting. It almost touched the 4,100 level at this channel, at the higher end of the channel, and then from there, boom, it just fell down like anything today. A sharp, dramatic, I would say, reversal from that high. Currently, S&P 500 is down by 160 points, 3.9%. Similarly, NASDAQ is down by 567 points, 4.74%, and Dow is down by 1100 points now, 1119 points, 3.44%. That's amazing. That's amazing. I think it's one of the biggest falls in 2020 in February, when it fell by another more than 1,000 points, I think, on when the COVID hit. Let me see what was the fall there. I may not be able to see that here. 24th of February. Let me see. 20th of February, it closed at 28,900, and on 24th, 27,900. So that was again 1,000 points drop, and today it's 1,120 points drop. That's massive. That is massive. Even larger than COVID drop. Okay, that's really massive. Let's see what else is happening. Target shares, I already mentioned. Walmart shares. Let's look at some of the numbers. VIX is up 17% today to 30.74, ahead of the monthly settlement of our options. S&P 500 futures are down by 3.9%. Gold is up by 0.27%. Silver is down by 0.86%, and oil is down by 4%. That's interesting. Let's see Bitcoin. Bitcoin is down by 4.35%, and Ethereum is down by 5.92%. In terms of stocks, as you can imagine, Advanced Auto Parts is down by 10.5%. We just noted, I think only 15 stocks out of S&P 500 are actually trading in green. all other 485 stocks are trading in red. So that is massive. Let's okay, let's look at this chart. Maybe that would be more appropriate. And let's go to the recent one. Advanced Auto Parts, so down by 11 on 10.5%. Their earnings is on 23rd of May. Apple is down by 5.9% now, almost to the bottom of 138.8. Today's minimum was 139.94. So that is a significant drop there from the 52-week high of $182. So it's almost at the bottom. Of course, people who are looking to get into shares like Apple and Amazon and maybe Tesla as well, it's a good opportunity, and probably they would be looking forward to these kind of levels. There's a major support level for Apple at around 138.27. So let's see whether it touches that or breaches that level. Accenture is down by 5.8%. Again, it's at one of the major support levels probably. It is at the level of almost March 2021. So definitely, and all these stocks are trading in that bearish channel, as you can see. Analog devices is down by 2.2%. Kamai Technologies is down by 1.29%. Applied Materials is down by 4.36%. Amarella is down by 6.7%. And AMD, which has been increasing for the last few days, has reversed again, down by 5.8% with a broader market. Amazon is down by 7.2%. That's big again, and that's pretty big, and it has fallen below that support level once again. Arista Network is down by 4.7%, and Air Products and Chemicals down by 2.1%. Applovin is down by 3.7%. Digital Turbine down by 7.5%. Activision, it's not moving much, down by 0.4%. Avantor is down by 3.5%. American Express down by 3.7%. Bank of America down by 3.2%, and Best Buy is down by 11%. So I think that is this Best Buy is driven by the consumer products industry as such. The cost of the retail operations, the cost of the supply chain issues, inventory write down, and logistical cost, and the wage increase probably. So all these are impacting all these retail companies, and Best Buy is just reflecting that as well. So because Target is down by 28% today, Bumble is down by 3.6%, Berkshire is down by 2.3%. That's interesting. Berkshire definitely another buying opportunity, I would say, from the top high of 362. It is now at down to 307 today's low, which is still higher than the 52-week low. So that is still there. Blackstone is down by 3.6%. Citigroup, which rose more than 7-8% yesterday, today it's down by 3.9%. So it is still above the close of Monday. So Citigroup, basically, yesterday's news was that Berkshire has acquired around $3 billion worth of stock in Citigroup. So that was the positive news yesterday, and today it is following the market trend once again. Chegg is down by 4.5%. Charter Communications up by 0.5%. Chivi is down by almost 12% today. Comcast is down by 1%. Salesforce is down by 4%. Crocs is down by 4%. Wow. Dell is down by 6.7%. DHI is down by 6.8%. So all these stocks are following their bearish trend there. So there is nothing, out of the pattern, I would say. Disney is down by 3.6%. DocuSign is down by 3.4%. DocuSign, as you can see, the 52-week high was $314, and today it's just $72. So that's a massive, massive fall. Okay, some other numbers. Enphase Energy is more or less flat today. HC is down by 10.9%, so 11% down. Wow. EXP Holdings, 6.8% down. Facebook is down by 4.5%. Similarly, Fortinet is down by 4.3%. GoodRx is down by 3.1%. Google is down by 3.3%. Somehow I feel the shares repurchase, the split in shares, they are not working in company's favor, even in this market, even though there is significant value being added to the stocks. Where the stock is a genuinely good one, and the company is buying the shares by enhancing the earnings per share, but still probably the investors are not really enthused by that at this market. Similarly, the splitting of the shares, that's also not encouraging anyone. Let's see some of the volume numbers. Let me see here. Let's look at some of the stocks that had increased yesterday tremendously. Let's say Apple. Now, if we look at Apple, yesterday's rise was on the back of bit of low volume. Yesterday's volume was around 78.33 million shares, whereas it is below the average of the past few days. And today it is 71.62 billion, 62 million already. What's the time now? There's another hour left in the market, so I'm sure it will increase. It will, cross yesterday's volume there. In terms of Accenture, similarly, it will cross yesterday's volume. Today it's 1.44 million shares. Yesterday it was 1.6 million shares. Yesterday's increase again was on the back of a thinner volume. So that is, something. If you look at here, average volume. See, today's volume is 1.44, whereas the average volume for last 10 days is 2.13. Okay, but today another hour is left. So let's see, maybe it will be a little bit higher, of course. Okay, look at Apple. Today's volume is 71 million. Average volume is 115 million. Okay. So that might be a little bit of respite. So today's volume is lower than average volume. AMD, today's volume is 115 million shares. Average volume is 137 million shares. Amazon, let me see, it's down by 7.1%. And today's volume is 3.72, whereas average volume is 5.26. Let's look at some of the other numbers. Netflix is down by 6.4%. McDonald's is down by 4.2%. IBM is also down by 4%. NVIDIA is down by 6.5%. Oracle is also down by 5.4%. Qualcomm is down by 6.5%. Wow, massive. Tesla is down by 6.6%. Another stellar company within NASDAQ. Teladoc is down by 5.2%. Upstart actually is up by 6.5%. That's interesting. That's interesting. Workday is down by 6%. Occidental Petroleum is down by 6%. And a Signature Bank is down by 3.3%. Another Revolve Group is down by almost 10% again, and it has touched the 52-week low of $26. Target is down by 27%, so it touched 52-week low today. That's massive. Really, it's already almost out of the chart. And it has gone back to the level of, let me see, November 2020. So 1.5 years of growth and any development have been wiped off. So that's massive. That is massive. Okay. So we'll start looking into taking some positions from later this week or maybe early next week, depending upon what happens tomorrow. Probably what I am looking for tomorrow is if anyone is, goes by today's trend, it will continue. Probably the trend will continue. And just note this level 3594. That is the major support level, the next major support level for S&P 500. And today, again, it is approaching this 62% or 61.8% level on the basis of the Fibonacci retracement. So that would be interesting to watch whether the S&P 500 breaches this this range level of 3,800 maybe, or maybe yeah, so it can easily come to 3,800 level there, and then the 3594 is also not far away. So 3594 is currently just 300 points away, 330 points away, and that is less than 10% now from here, which looks quite a reality, or maybe quite possible in the next 7 to 8 trading days. Let's see how fast it will reach that level, and if it reaches at all, that will be a significant level since November 2020. Okay, so that's about the numbers there, and obviously it's not very pleasant, and but as always, we are looking for opportunities in this market as well, and we have closed some trades, we have taken some new trades. Hopefully they will materialize in the next few days, and I will keep you posted. Thanks a lot for joining this watch list, this live YouTube live program, and subscribe to our channel if you like our videos. Look into our social media posts in Twitter, Facebook, and LinkedIn. follow us there as well. Take care of yourself, take care of your trading, and